So I'd like to talk to you today about banks and fintech relationship and how the relationship is evolving. Are we talking about competition, rivalry, collusion, or even co-opetition? So I like to describe myself as a serial fintech entrepreneur by accident. I created two companies. The first one, Leetchi.com, in 2009. At the time, I was a student, and I was struggling to collect money from my friends at school for organizing weekends, birthday group parties, etc. So I had this idea of why not create a website where you can collect money online. And then, as a very naive person, I went to banks to ask them to open a business account to me. So I was 25 years old, trying to open my own bank and asking for a business bank account. And as a matter of fact, no one wanted to offer me a business bank account. Instead, they were just willing to offer me an internship. So this is the way my relationship with banks started, offering an internship where I was looking for a business account, very easy things to open normally. They were really laughing at me when I was asking this business account, so it was quite of the beginning of a struggling journey between me and the banks. So 8 years ago, actually, this was how banks were looking at startups, funny interns who have to do the administrative work. In 2013, I created MangoPay. It's a payment API dedicated to marketplaces, collaborative consumption platforms, and crowdfunding. MangoPay enables this platform to collect the money, escrow the money, and then withdraw the fund. We now have more than 1,000 platforms in Europe, partners, so it has been a very growing business. And in last September 2015, I exited both companies, Leetchi and MangoPay, to the Crédit Mutuel Arkea, with a very French well-known bank. So the problem between banks and startups is the David and Goliath effect. Because I have to say, size matters in this industry. The banks are huge. The profit of the banks are very huge. Regarding in a study of 2014, the profits for a bank are more than $1 trillion dollars a year. So it's a huge, huge, huge difference of size between banks and between fintechs. So there is this effect of David and Goliath. The startups are agile, of course, but the banks are rich. And as you may know, as CEOs, as entrepreneurs, the cash is king in our industry. But on the other hand, fintechs are growing very fast. And as last year, more than 12,000 companies have been created in the fintech industry. So all the fintechs are in fact attacking the bank industry from all the sides. For example, in terms of investments, in 2013, 4 billion was invested by VCs in fintech industry. In 2014, so 12 months after, it was more than 12 billions. So it was multiplied by 3 in less than 1 year. One of the amazing facts about the fintech is that they captured the customer relationship. Because banks have stayed for years in their golden tower, they haven't seen the people, they haven't seen their users, their customers, and they haven't been oriented to them. And this is where the fintechs arrive. It's because they are just looking to the people, they are just oriented to their customers. They feel and they resolve, they feel a need, they resolve a problem. So for example, Leetchi, my first company, the group payment system, after 6 years, it's more than 5 million active users in Europe. Do you know a bank that have 5 million active users in less than 6 years? I don't, actually. So this is the quite funny thing about fintechs. We focus on the need, and banks are struggling with their profits. One of the funny anecdote I would like to share with you today, that is very recent thing, is last week I was having a discussion with the right-hand man of the CEO of Société Générale. Société Générale is a very famous French bank. It's a 30 billion capitalization bank, so quite a huge company, almost 300K employees. And so this guy explained me that they have transited from calling their customers, labeling their customers, not anymore customers, but calling them users. And I was quite surprised because at Leetchi and MangoPay, we take a very deep care in calling people customers and not users. And so I asked him, why are you slightly going from a customer to a user? And the reason, in fact, is because they no longer want to only have a mercantile relationship with their users or customers or people. And they now see values in a product where there is not a business model or no revenues, but where there is a use case. So in fact, they go from a vertical and very narrow-minded approach to a more open-minded and a more ecosystem approach. And I really believe it's something important and quite interesting, is that there is kind of a paradigm shift from these banks. They see that they can't anymore only see the profits, but they have to see the crowd and they have to open their mind to the ecosystem. So the bank's perspective, as you may understand, is interesting. They of course, have a lot of profit, as I just said. Their return on equity since the last crisis is quite stable. So they have money, but their margins are failing a lot, more and more every day. The requirement in terms of cash and legacy from the central bank, is going higher and higher and more tough and complicated to handle. So they are attacked by all the ways. Also, something a fact quite interesting is that the SMEs customers, they are 5 times more willing to open a bank account into a bank where there is an online banking good product instead of having a local agency. So even in the whole normal industry, people are more looking for online banking and online relationship instead of what a couple of years ago we would have believed that the one-to-one relationship in an agency was the most important part of the relation. And last but not least, the forecasts are uncertain for banks. McKinsey last studies predict that maybe between 10 to 40% of the bank's revenue in the next 10 years are at risk due to the fintech companies. And the most dangerous part is in the consumer finance because it's where all the fintechs are moving quite fast and is the most vulnerability part of the bank industry, and it could be by 2025 decreased than more than 60%. So you can see that even David is struggling a lot, and how can it be possible that in such a big and strong industry they lose more than 60% of their revenue within 10 years? On the startup point of view and perspective, I have to say they don't like banks, they don't like suits, they don't like gray hair. They only have the feeling that they are going to attack the bank landscape, and they really fear the partnerships with banks. Because they have the feeling that if they partner with banks, they are going to lose their autonomy, lose their agility. So there is kind of a childhood behavior from the fintech companies. And of course, I can understand that how an agile culture, agile companies such as startups can be opposed to a non-customer-oriented vision and to a slow decision process. But in my point of view, banks and fintechs share a lot. And this is what I would like to introduce you right now, is regarding my experience, why they share a lot and how they should cooperate together. So the first thing fintech and banks share, do you know what is it? People. Because of course, all or a good part of the people working in the fintechs come from the bank industry. Because of the crisis, because of the fact that people from the bank industry wanted to find a more make sense experience, make sense work. So it has a lot of effects in terms of the HR. And it's a good thing, for example, from my experience, a lot of my developers, they come from the bank industry, and it has a lot of value because in fact, they know the industry, they know how to process, they know how security is a high importance thing. So the first thing we share, fintech and banks, it's the people. The second thing is that a lot of fintech and a lot of banks, in fact, are working together. For example, for PayPal, on the American market, their acquired bank is Wells Fargo. For us, at MangoPay, we work with more than 10 different banks. We worked with Barclays, Crédit Mutuel Arkea, Commerzbank, Sabadell, and it's a very interesting relationship, and it's something I've really loved about the bank industry, is that they all used to work together. And so fintechs can have a bank as a supplier, or the opposite is true too. And of course, more recently, in the last couple of years, we have seen a lot of banks doing corporate investment in the fintech industry. BBVA, HSBC, Santander's, they are all moving and creating corporate business units to invest in the fintech industry. So for this reason, I really believe there is strong relationship that can be built between bank and startups. And in fact, there is 4 relationships possible. The first one is, of course, acquisition. We have recently seen the ecosystem and the market very shaky. BBVA acquired Simple in February 2014 for more than $100 million. They recently acquired Olvi in last March. So lots of acquisition. And also something quite interesting, that they understand that the valuation of the fintech they are buying shouldn't be done only based on the EBITDA, because it's not possible. It should be based on the revenues, or based on the technology, or based on the size of the community. The second relationship is, of course, investment. Can be direct investment. It can be investment done through the accelerators, through incubators. Barclays has its own incubators. Wells Fargo has its own incubators. PayPal is doing a lot of things in the ecosystem also, investing in companies, buying companies such as Braintree. The third relationship can also be, of course, business intelligence, and everyone has to win from the business intelligence. So, for example, banks do a friendly observing or not very friendly observing of startups through hackathons, mentoring, but on the other hand, fintechs can win a lot of experience and a lot of knowledge in having this kind of relationship with banks. And of course, the last relationship is a no relationship that I believe can't last forever. So I'd like to give you a little insight about my experience as a fintech company acquired by a bank. So there is a lot of things that I want to share, but one of the most important things is that when I started, when I was 25 years old, I was a student, and I was very, very bad at finance. I think I had 7 on 20 at my last finance exam, so I wasn't very willing to go to the finance industry. So I needed to learn, and the only way to learn is to learn from people. And that's one of the reasons we have quickly built a lot of partnership with a lot of banks, because we needed to learn. And in all these banks, of course, there are not very interesting people, but there are also what I call startups friends. And my advice for you, if you are in the bank industry, would be to find these startup friends, because they can help a lot, give you a lot of information, share their knowledge. And for example, one of the banks we were partnering, Crédit Mutuel Arkea, their CEO was quite open-minded with the startup ecosystem. He was always asking me questions. So after a couple of months of working relationship, I offered him a board member seat, an independent board member seat in the company. And so for 4 years, Ronan Lemoyle, who is the CEO of Crédit Mutuel Arkea, advised me on how to get my e-money issuer license, how to invest the floating cash, how to work in an industry that I had no at all idea. And at the end, it came with a surprising offer and the acquisition of the company. So it can be interesting relationships. Another thing also I would like to share with you is that the banks can help the startup. As I just said, of course there is the knowledge. There is also being acquired by Crédit Mutuel Arkea was also brought also has a lot of gain in terms of trust, either for Leetchi or for MangoPay. For MangoPay as a B2B business, there is a lot of huge marketplace we have signed because we were part of the group Crédit Mutuel Arkea, because in France at least, this big marketplace didn't want it to work with a startup. They wanted to work with a bank. And now we are the startup in the bank, and they have been very happy to work with us. And we signed 3 contracts with 3 major marketplaces, I'd say 10 to 15 days after the announcement of the acquisition. So it's quite interesting to see how people behave and how good this relationship with our new shareholder can also bring a lot of value. Of course, for Leetchi, as a B2C product, having this kind of brand behind us, Crédit Mutuel Arkea, also help us to go more and more and more global and win more and more users. Banks can also provide technology. They have amazing technology in-house, but they don't know at all how to put it into a SaaS vision. So what we are doing right now is Crédit Mutuel Arkea is that we are working with them to grab technology and process it and bring it into a more SaaS vision. For example, we are working on a project to offer a unique IBAN for each e-wallet created on MangoPay platform. This means that when this will be released, we will be able to offer anyone who wants to open an online bank on top of MangoPay to do it in a couple of days. So there is a lot of value and a lot of technology, but banks doesn't know how to use it or how to sell it in a more ecosystem vision. And of course, the last thing is about, again, knowledge. Because the regulatory is the queen in our industry, and it's really, really hard to understand. Because you have to understand how it works. You have to show who you are. When we applied for the e-money issuer license, I was 27. And believe me, being a 27 girl, never have been working in the payment or banking industry or never have worked before creating my company and applying for a bank license, it was a hard job. I had to build my trust. I had to show that I was able to manage a bank, understand all the process, the technology, the fraud, the compliance, and etc. So it took us 2.5 years to get the e-money issuer license. And I believe that if I would have been a 40 years old man, white and gray hair, it would have been more easy to have it. So the experience we can grab from the bank industry and from the bank partner has a lot of value. So I'd like to share you a couple of key successful partnership with banks. The first one is time. As any kind of relationship, I believe time is the key. You can't build a trust based on a couple of days of a relationship. So the first thing I would do if I had to do it again, is to build this relationship with different CEO of banks, with different management, top management of banks, or insurance, or anyone that is relevant in my industry. Because at the end, for a good acquisition, it can't be done in a couple of days. All the acquisition I have seen, and not only in the bank industry, they have all struggled if it wasn't based on a strong and long-term relationship. And this is one of, I think, the most important reason I accepted to sell our company to Crédit Mutuel Arkea. It's because I knew they're not going to fuck up the company. I knew they're going to let us manage the company, and I knew we had their trust. So the second point, of course, as a key success for me is independence. You can't, I think, in my vision, mix the management team, the governance of the company, with the classical bankers guy. So this is something also that was really important for us, is that Crédit Mutuel Arkea allowed us to stay absolutely independent, to keep our way to manage the team, to keep our way to build the ecosystem, our vision. And this is something that was really relevant for us. Don't touch the company. Don't come, actually. We only allow the gray hair for the board meeting one time every 3 months. And the last point is the no-zero effect. For God's sake, please, I know startups are sexy and fancy and whatever, but it's not the zero. And something I was really concerned when we did the acquisition is that Crédit Mutuel Arkea is a 10,000 employees company. We are a 60 people company. Even if 1% of these guys call us one time a year, they will destroy absolutely the company. So we had to find a way to explain to Crédit Mutuel Arkea that it's cool, we want to be part of the game, but just don't come, don't call us, or do it if it's really relevant. And they have offered us a very nice way to work. They have decided someone at Crédit Mutuel Arkea, one person was in charge of all the relationship with us, and anyone inside Crédit Mutuel Arkea who wanted to have any contact with us has to go through this guy, and he was doing, and is still doing, splitting the question and sometimes just not telling us that someone wants to talk to us. It seems really simple, but it is very important. And I've recently also wrote an article from Simple founder who said exactly the same about BBVA. They had someone in-house at BBVA who was deciding either if they put in contact BBVA founders to, Simple founders to the person at BBVA that was looking to talk to them. So this is, couple of important things. I hope you enjoy my vision about banks and fintech, and I wish you a very nice day. Thank you.